Welcome back, everybody. July 2024 already. Quick market update today for the Milwaukee market. And then I have some tips for selling rental properties when it's time to sell them. We've picked up a lot of equity in Milwaukee, so it's a question that I get quite a bit. Before we get there, let's take a quick look at the latest numbers from the MLS. So inventory is up 35%, over 3,300 units. We're very happy that we see more inventory for sale. That's a lot more. We've been in the 2,000 unit territory for quite a while. So going from 2,000 to 3,300, that is a huge change from a buyer's perspective. But on the other hand, when you look below, I have the historic numbers. So always also from June, because as you know, our market is very seasonal. So important that you compare the same month from the previous year. 6,000 units before COVID and 13,000 units back when we had a balanced market. I mean, nobody can imagine this anymore, what the market feels like with 13,000 units, but that's kind of historically how Milwaukee used to be, or the metro area used to be normally. Very tight market, not many properties are selling. That's true across single families, duplexes, small multifamily, large multifamily. There's just not that many transactions. We are just 2,000 single family homes here. It should be normally over 3,000, so very tight market, not for a lack of buyer demand, but just not a whole lot of inventory there. We're up on price 6.6%. I think that's the lowest number we have seen this year on a monthly basis. Usually we're right around 8.5%. I think the reason why our June number is 6.6 is because last year June was absolutely insane. So we're comparing with last year June. I am pretty confident that we're going to see year over year remain in that 7-8% range that we had previously. We see it on a daily basis. Inventory is changing dramatically. Look at the last 3 months, what happened here. So we have broken the high from last year. If you remember September, October, all of a sudden we had a lot of inventory coming in towards the end of the year. Then went back down here to where's my laser pointer? Here to the 2,000 range, and now inventory is going up. And there is quite a bit more inventory coming. You know, if I talk to my service providers, like my photographer, they're all booked out. My stagers are booked out. So there is inventory in the works. Not enough to really change the market totally substantially, but it is definitely a breeze of fresh air. Why I'm saying it doesn't change the market totally, you can see that here. This is a list to sale price ratio. So we are still in the competitive zone, in the red zone. If you're not familiar with this metric, this is basically on average how much people end up paying after accepted offer, after closing, compared to list price. So historically, this has been around 95, 96%. That would have been normal. Then it was, everybody thought the market has gone crazy when we broke 100% first time, because who is paying more than list price? After all, this is Wisconsin and not California. But the last 3-4 years, this has been pretty much the norm, that most of the year we are north of 100%. So on average, people are paying more than list price. I got beat out yesterday on a listing in Wauwatosa where we offered $91,000 over list price, and that was not enough. So that tells you kind of where we're at. And of course, these are the comparables that are setting it for the future market. In terms of prices, interesting two-step development this year. So with the blue line that you're looking on here, those are list prices. So this is what sellers are asking. And usually sellers are leading the way. So that every year in spring, they step out a little higher than previous years. So this is, true to the seasonality. What was weird is that in January, February, and March, there was a pause in the market. And that had to do with the general temperature in the room that we had. In November, mortgage rates went over 8%. So there was a hesitation around February and March, what's going to happen. And then as we had the first 12 weeks under our belt, sellers got a lot more confident again, and then list prices went up. Now the question is, what were the buyers doing? We can see that here on the green line. So buyers basically have no choice but following. And this is where we are today. So the two curves usually start overlapping in June or in July, and we're there at 355,000. That is our median sold price now. And that probably marks the peak for this year. In terms of industry, what's going on, just a quick overview. I always keep tabs on what's going on with the economy and in terms of what is impacting the real estate market. I have spoken a lot on my YouTube channel about inflation over the last years. Just a quick summary that I always keep pounding because so many people are thinking of inflation the wrong way. So inflation is not that things are getting more expensive. And when inflation goes away, things become cheaper. That is wrong. What inflation is that the dollar is slowly losing purchasing power. The dollar has always been losing purchasing power, usually about 2% a year. That's where the Fed wants to get back. But at the moment, we're higher. On Wednesday, we came out with a 3.0 consumer price index. It's not as much in the news anymore, but it is still significant because for us real estate investors, that is nice. Because what does inflation do? It erodes the cash value of the dollar, but it also erodes the value of the debt that we owe on investment properties. So we have huge leverage. You could basically say a real estate investor is, if you're investing in real estate, you're shorting the US dollar. It's kind of what you're doing when you invest in real estate. So inflation is important. The good news here is we're slowly coming down. Used cars have come down. We've seen energy come down. We have not seen housing and mortgage equivalents coming down. So that is one of the biggest components that is keeping it still up at the 3%. And quite frankly, I'm not very hopeful that this is going to change dramatically. So we'll probably stay in that realm. As a real estate investor, that's kind of a good thing. I also like that wages are going up now faster than inflation. So at the moment, we're around 4.5%, 5% wage increases year over year. So consumers are slowly getting the purchase power back. We've spoken in previous month about rent increases here in Milwaukee. So that all ties together. Looking at the unemployment rate, you hear a lot people talking about that the job market is so hard. So we have currently in the US 4.1% unemployment rate, and in Wisconsin, that's the blue line, 2.9%. So historically, 5% is kind of the middle ground. Scholars used to say if you go below 5%, it's bad for the economy because it's difficult for companies to find labor. So with 4.1, we are higher now than we used to be. So the Fed has been trying for a year now to slow down the economy, to cool the economy, to cool inflation. So they want to drive up unemployment rate, and that is slowly happening. We used to be in 3.7, 3.8. Now we're the first time in the fours, and this is probably going to continue. So hopefully that's enough for the Fed to at least set a symbolic change in rate. I don't think we can expect like a meaningful change in mortgage rates. It's the consensus of the 20 biggest banks at the moment is that we're going to see a drop in September, but I wouldn't hold my breath because that might be 1/8%. It is significant because it would be a change in trend, so it's an inflection point of what the Fed is doing, but it's not going to be enough to really make buying or selling a rental property significantly different than what it is today. The best 30-year residential rate that I've seen in the last couple of days was 6.375. So that's where currently at. Most banks are between 6.5 and 6.75, somewhere in there. So we're well below 7. If you want to know more about this, check out my YouTube channel. The full market update is always on my YouTube channel. I posted this one about a month ago. Here's a quick shout out to my team. We did this year already 55 transactions, about 21 million in total revenue, and our average $392,000. So, I'm not telling you this to brag, but, with every transaction we learn, we see what's going on in the market, we see what works, what doesn't work, how the market is changing. I just got off a phone call about how this week and the last week has been so different than just before the week of 4th of July. We're still on the shoulder end of the holidays. So we're seeing all that because we're sufficiently engaged in the market. Let's get to the topic of today, tips for selling rental properties. So this is a little different because normally I speak here from a viewpoint of an investor. I've been investing in Milwaukee for 15 years. We have a portfolio of rental properties. We have a small in-house management team that's taking care of that. So that's usually the perspective I'm coming from. Today, I have a little bit of insights from you from my work as from the brokerage side. And so if you are thinking it's time to sell a rental property, you wouldn't be the first one, because as much equity as you have accumulated over the last few years, prices have basically doubled in the last 9 years since 2015. Making that up with cash flow takes a long time. So that is usually the consideration where people say, yeah, I'll just clear off some of that equity and make my life a little bit easier. So we'll talk about some tips here. And the way I've structured this, it's mostly about what I see people are doing wrong. And there is, quite frankly, for investment properties, there is a lot to critique. You see a lot more effort being put into marketing and selling residential properties, especially luxury residential, than we're seeing at investment properties. And
Guard, how's it going with you? I sent him in. I called. My car's been an ass. Trying to keep me from going around fast, but I'm still going.
Cinnamon, thank you. Okay, perfect. Muted. All right. So the first question, and this is long before you put your property on the market. The first question to ask, who do you want the buyer to be? Who are we selling this to? Do we want to sell it to an investor? Do we want to sell it to a rehabber? Do we want to sell it to a first-time or second-time home buyer? So that is really the first question, because the answer to that question will give you what they're expecting. An investor usually wants a low price. They worry about cash flow, and especially with the high mortgage rates. I have this conversation with owners of 2 families and 4 families. They say, yeah, we should sell it for this. And I'm like, but you're like 20% cash flow negative, even with 25% down. Who would buy this? So you want to put yourselves in the buyer's shoes and figure it out from a buyer point of view. Is it attractive that I'm putting in the market? And if not, how can I tweak this to make it attractive so I still get the most amount of money? If you sell it to a rehabber because it happens to be a really rundown rental, yep, you will have to give a discount. If you sell it to a first-time home buyer, maybe it should be in move-in ready condition, because that's what they're looking for. Nobody has the time, skill, and expertise and money to actually do a rehab. So if the rental property that you're selling is a single family, then my recommendation is treat it as a flip. Most of you have probably done flips at some point in your career, and that's exactly how I would look at this. So wait until the tenant moves out or terminate the lease from your end, but get the single family home vacant and then treat it as a flip and really say, okay, what are the things that I can do to make this look more like the right picture and less like the left picture here on the screen. I think that's pretty self-explanatory. Generally speaking, when you are planning these things, you need to know how much it's going to cost you. In my book, you should see a 3-to-1 return, 2.5 at least, on the money that you're spending. So you need to know, what is my budget that I'm putting into? What is the as-is value, and what would it be if it's totally fixed up and nice? And you're trying to dial it in at around ideally, you want to see 3 times return the investment of the money that you're spending on preparing it. We can help with that, so we can help you estimate how much it is to get it there and what the value would be before and after. Multifamily is a very different story. So you notice I'm jumping here from single family to medium size multifamily. So here it is all about net operating income, because along with the cap rate, that really defines what the property should be selling for. When I look through listings online on the multifamily space, I mentioned it before, I'll say it again. It's shocking to me how little effort is put into the visual presentation. In my book, if you put a multifamily on the market, put some effort into this, and that goes both to the owner as well as to the broker. That should be a collaboration. So you want to start talking to your agent a while before you're actually putting it on the market. When people are calling me, say, we're ready, we want to list next week, that, there's only so much I can do at this point. If you bring your broker in sooner, then you can discuss how do we strategically position this, how do we want to do this, what makes sense, what doesn't make sense. For example, an absolute no-brainer is putting weed and feed on your lawn and watering it, a month or two before you're putting it on the market. Nothing screams neglect more than a crappy lawn and maybe even trash in the lawn. And then once you have that, then put some effort into making nice pictures. You can see the picture on the right side here is blurry. It's obviously a cell phone picture. I mean, it's on a droopy gray day. You couldn't make this much less attractive, in my opinion. And I think, for real estate investors, you're still selling it to somebody, even though it's all about the numbers and NOI and cap rates. You're still selling it to a human. So there is that component. And of course, that is also true with the duplex. The visual presentation, you have both duplexes here, both are here from Wisconsin, and the difference couldn't be more stark. With duplexes, my default recommendation is to have one unit vacant, because then you can actually sell it not to an investor, because investors, as we have discussed before, always want a lower price and a discount. You can sell it to somebody who wants to live there. So you take one unit, you get it vacant, you prepare that, treat it a little bit like a flip, make it nice, and then we can market it to a first-time home buyer. That will yield significantly more money. I know from experience, it is really worth the effort. It is a huge difference. You have to put some effort into this. A big component when you are bringing a home to the market is managing the tenants. That is, regardless what size it is. So there are always a lot of questions on how to do this. If it's a single family, how do I approach the tenant? How do I create that vacancy if they're not already moving out? What is the legal side of this? And if it's a two-family or a multifamily, then you deal with other issues. So there is communication that should take place before you're getting on the market. So that's pre-listing communication. Tenants have, of course, their own ideas what is going to happen. So I prefer to control the narrative there, set expectations, help bring down the anxiety, because they are worried about their home. It's going on the market. What does that mean for me? And in the absence of somebody telling them what is going to happen, they're going to fear the worst. And so they're putting up resistance. Of course, you have to follow the state law and your lease when you manage these things, when you schedule walkthroughs, improvements, photo shooting, and later on showings and inspections. But there is a fine line. I see it many times that agents who are not investors themselves get bullied around by tenants. The tenant starts dictating the terms of showings. I don't want showings from Monday through Friday, so only showings on Saturday afternoon. And that usually has a dynamic where it keeps increasing and getting worse, and then they decide they don't give access for the home inspector altogether.
Whoa.
So you have to walk
Hi, thanks for calling back today.
Hey, John. Yeah, thank you. Muted. Okay. So be very, this is really, you're walking a fine line here, because on one hand, you want to be as nice and collaborative as possible because you kind of need their collaboration. It definitely makes it better if they tidy up their units and it looks good for a showing. But at the same time, if you approach them too softly, then they think they can call the shots and decide if a showing is going to happen or not. And let's be very clear. State law gives a tenant 12 hours advance notice for a showing, inspection, or anything they like that you need to do. Your lease might say 24 hours, and then we have to follow the lease, but state law is 12 hours. It's still, in my opinion, I think good practice to give them a 24-hour courtesy and let them know what is going to happen the next day. But that is managing that piece is absolutely critical for the success. So you need to be savvy on managing tenants. Then transfer of the information. This is a step that a lot of times falls through the crack that you have closing, and then nobody knows. The new owner doesn't have any contact information of the tenants. The tenants should ideally receive a welcome letter on that day that's prepared. We can help with that from the new owner, so they know where to pay the rent to, who to call, what to expect, how things are going to be. And most importantly, to calm them down and avoid having resistance and anxiety. Yeah, and that's basically it. Hope you had some good takeaways. I'll open it up to some Q&A, and I'll see if I can get the chat room to display here. Alexandra, do we have anything in the chat?
Nothing so far.
All right. Anybody?
Marcus, can you hear me? Marcus,
Yeah,
it's Greg Goldman.
Greg.
One of the tricks that we learned is if the seller is interested, we get tenant buy-in by letting the tenants know far in advance that it's going to happen. And then the seller gives each tenant a letter that says, if you cooperate and you keep your unit clean, yes, I'm selling the building, but we'll give you $100 or $200 at closing, after the closing, coming right out of the seller's pocket as a rent discount. And then suddenly they have a vested interest in behaving and helping.
Absolutely.
I had one landlord went up to $400 to each of his tenants at a duplex, and they loved it.
Yeah, it's a great idea. That works very well. You just have to be very careful how you present it, because if you have not established before that this is going to happen, regardless if they're collaborating or not, they need to sense that this is going to happen. If you lead with an incentive and you're asking them for buy-in, it can backfire and you can just invite more resistance. So I absolutely love that idea, and we've done that in the past as well. But what I've learned is you want to establish the rules of this engagement first before you offer that an incentive. I like the collaborative approach. I like to have them invested in the success, but I've seen it play out when you lead with that. They feel kind of like you need something from them, and it puts them in a position where they can dictate the terms. So you always want to be very careful with that.
Dave just posted in the chat.
Shorting the US dollar. Yeah, I mean, that is basically what you do. Another way of explaining that is think back what real estate did cost in the 1960s. I had that slide somewhere at some point of a single family home that was brand new, built and sold in May of 61, I think for like $11,500 or $12,000, brand new ranch with air conditioning. That was a big sales feature. And you could buy it with an FHA loan with $350 down. So that was 1960. The same house is still around. I think it's worth today, I don't know, somewhere around 320, I believe. I looked it up at the time. So that is basically what is happening to the US dollar. When I find it that when you expand the time frame to this much, everybody has an intuitive understanding of how inflation works. Yes, of course, everything was cheaper in 1960 than it is today. But that is just the compounding effect of 2 or 3%, and sometimes a little bit more, as we've seen over that time period. So when you are investing in a hard asset, that could be a business, that could be a gold mine, that could be physical assets, that could be real estate, you need to bring more of the same paper dollars this year than you would have to bring last year in order to buy the same thing. So inflation has averaged in the last 12 months, I don't know, 3.5%, 4%, let's say. And we're seeing real estate prices going up by 6.6%. So the real increase in real estate prices was only the difference of those two, because you have to net out inflation. You have to bring more of that paper this year than you would have to bring last year, because the paper is just worth less. 40% of the US dollars that that are circulating today have been printed or digitally created since before COVID. So the amount of money that we have in our system, you can look this up, it's called M2 money supply. The amount of money that we have in our system is vastly bigger now than it used to be. So it kind of only makes sense that per unit, the value is going down. But that piece of real estate that you had that is providing cash flow and a home for somebody, that hasn't really changed in value. So you just need to bring more of these paper dollars in order to pay for it. Does that make sense?
Hey Marcus, hey everybody, good to see you again. That was my first and only rental duplex. I lived on one side, flipped it, then moved in, and then had another tenant come in on the other side. I only had it for a couple years, but I made one of the cardinal sort of mistakes. And I knew I was making it, and I rented out to family, and that got really ugly, so I just had to get rid of it. The market was really great at the time to sell. So I sold it. It was a duplex in a cul-de-sac in Greenfield. Awesome property. But I had a shared driveway, so I had some problems with that. But an investor came in and was like, heck yeah, I'm picking up a duplex in Greenfield. It's just great location. I had a pretty long-term tenant on the one side, and then it wasn't too pretty with my family side. But something I did before selling it was talk to both tenants. And I let them know that I was going to put it on the market and that there would be showings. So I just was nice and gave them a heads up, and they didn't fight me too much about it. I do have a friend that is a tenant in a property that's on the market now, and they're giving the agent a really hard time. They're so mad about it. They will not allow showings. So I'm so glad that I didn't have my friend as a tenant, but they're just really bitter about it. So I can understand the hard time that an agent would have with rental properties and tenants like that.
Yeah.
But I was fortunate. I didn't have that problem.
You have to appreciate that. That's tenants have nothing to gain. It's nothing but a nuisance in their life that all of a sudden strangers are traipsing through their house. And it sucks being a tenant in that situation. I think that is why it's so important to, reach out and build that relationship before, where you can say, look, this is going to happen. It is going to be an inconvenience for you, and we're sorry for that, but we're trying to make it as easy as possible for you. Let's talk about how this is going to work. And I think then you can mitigate these things a little bit. And then big shout out here to the RPACon 2024. This is going to be a bigger event than we had last year, and we're expanding it to 2 days because we know we have a lot of investors that are not full-time. You guys still have a W-2 like I did for the longest time. And so I didn't want to take a Friday vacation day in order to go to an investor event. So that's the reason why we're trying this year. We're expanding it out to Friday and Saturday, and it's going to be at the same location in Milwaukee as we were last year. That's all I had for you today. Thank you very much for joining in, and I'll see you hopefully at the beer garden.
Thank you, Marcus.
Thank you.
Thanks for your help, Alexandra.